Good morning, traders. Welcome to another Flow Show. We write Tuesday, 22nd of July, and welcome to this, what is it, summary? Nah, it's very cloudy over here. Edition of another Flow Show. Before we go into the headlines, etc., let's remind us that we have our very hot summer discount running. You can get 40% discount on monthly subscriptions. So this is something really to take advantage of for those who are not yet in our community. It is our anti-inflation offer. Also, you can still sign up to the changes or to be on the list when you get the newsletter to the changes that are upcoming in our community. Something big is coming. So sign up and you will be the first ones to know where and when those changes are going to happen or what the changes will be. And also, you are still going to be enlisted to be one of the two lucky winners of a trader funding program account. So no time to waste. Come and join us and sign up. Um, what else do we need to say before we start? I don't think that there is much more to say. Yes, while we are on the show, just know for those who have sterling in position that Bank of England's Bailey is testifying on the July financial stability report. So there may be a few headlines I want to keep an eye on. We should not have too much of a market shocking lines, I think, but we never know. Okay, so that's ongoing while we are on today's flow show. So without further delay, let's quickly run through the overnight headlines. There haven't been many, but some of them are quite interesting nevertheless. First, let's move over to some comments that we had from the Chinese authorities and the Chinese SAFE, which are the financial authorities over there in China. And if anyone is hoping to have a directional position in the Chinese yuan, well, they are telling us not to hope for too much because they said that they will keep the operations steady in the second half of this year and they will basically keep the FX market stable. So for those hoping to make money in the Chinese yuan, it may perhaps be better to look at a different currency, I would say. Furthermore, and then we first go on to the geopolitical side because there's still, and I guess together with what we know about the rumblings at the Fed or politics versus the Fed, one of the reasons why gold may still be supported as well is that Iran has said that they will continue to enrich the uranium. It was kind of expected, obviously. But then we had a reaction from Trump saying that he doesn't exclude another attack onto Iran because of those declarations when they commented about continuing that enrichment. Also, we had another headline dropping not that long ago that Israel said that they are not done with Iran. The campaign against Iran is not over. So that side of the unfortunate geopolitical scene is still very much ongoing. We also know about the reactions in Russia versus Ukraine. They are upping their mass attacks via drones on Ukraine right now, and so all of that is still keeping that side of wars ongoing. And as I said, I think it's probably part of the moves that we are seeing still in gold. I will come back to those moves later. In Japan, we are now in the jostling period to know what's going on or what is going to happen with Ishiba's government. So far, he hasn't given too much indications of potential changes in his government. Um, Other LDP heads are now as well calling for him to step down, but so far he has been pretty adamant that he will stay on to try and continue to push for his program. But we know that he will need one or the other third party to come and support them. But for the time being, there's little fresh news there. We had some BOJ watchers thinking that BOJ will wait for another hike to know what's going to happen on the political scene, although the Bank of Japan has kind of indicated that the election did not change their program too much, but it's rather the trade talks that they are watching. And regarding those trade talks, Akazawa, the main Japanese trade negotiator, has had a 2 hour call with US officials. We have not heard too much coming out of that meeting either. So I suppose that they have not made too much of a headway towards at least the structure of a trade deal. So that is another one that we will need to watch before that deadline, which is now, in 2 words, rather a dead line after Besant's comments that he wants good trade deals instead of rush trade deals. But Japan visibly wants to push for something at least ahead of the 1st of August. So that, together with the local politics, is something that is going to obviously drive the yen in the sessions to come again. Moving over to what's happening in Australia. Yes, we had those RBA minutes. Well, the approach is, how shall we say, cautious. Cautious was the main word. The RBA governor had a bit of a grilling that they should have been faster to cut rates, but she was pretty forcefully rejecting that and saying that the RBA needs more data to confirm a rate cut. It does seem to filter through that they may be onto something for the next meeting. We have seen that relatively weakish jobs report that came out last. So maybe it's not going to take many more data to take them over the edge and to lower their rates again from their current 3.85%. But for the time, they prefer to err on the cautious side, like most of the central banks are doing, really. Okay, then over to the Powell and the Federal Reserve saga. Um, Yesterday's one of the GOP members, Luna, has taken to or wants a court order against Powell. He supposedly lied about those refurbishments in the Federal Reserve, called them like small adjustments. They say like they are not small adjustments, and this the politicians are trying whatever they can to push him out, and whether those court cases will get through is one thing, but I think they really want to just tire him and make him really disappointed enough to throw in the towel himself. That's how it looks right now, because the investment added on top of it yesterday during an interview, saying that although the Fed independence is not something to be negotiated about, which is paramount, but then he asked for a complete examination of the Federal Reserve non-monetary policy operations. That says enough. He's also calling for a revision of those refurbishments. They don't really agree with the letter that Powell himself has sent to the Congress, also explaining everything about those refurbishment and that they were based on 2017 plans, which actually was during Mr. Trump's first tenure as a president. Uh, um, so yeah, there's a lot going on. We heard from one of the banks, Deutsche Bank, thinks that if Powell exits, it may lift the long-term yield by close to 50 bps. It's also going to weigh on fiscality, but I think we're not at the end of we for sure not at the end of the story, because I guess that Trump is not going to miss a single day nor occasion to continue to put that pressure. But is the Powell saga going to court is still my question. The market is trading cautious versus the dollar right now, albeit some dollars are not equal. But we can for sure say, and this is the other part I think that is supporting metals or gold right now, is that the market is really building in some kind of cautious in case Powell would throw in the towel. He's actually to speak today, but it has nothing to do with all those affairs. And I'm just going to pull up the FOMC page while we were looking at it yesterday as well. But the subject of today's meeting or conference is just the integrated review of the Capital Framework for Large Banks conference in Washington. So Mr. Powell himself and Vice Chair for Supervision Michelle Bowman, who was, you recall, one of those who was potentially calling for a rate cut in July. They are both going to speak there, but it is normally not the venue to talk about anything monetary policy, nor troubles with what's going on in the Fed's refurbishment. Now we will see if he gets away without any questions about it, but it should not be the venue for it. So when we see on the calendar that he's supposed to speak, it should, in theory, not impact markets at all today. Let's have a quick look at the calendar, because not a lot has gone on since we spoke yesterday. Canadian industrial production prices, etc. A little bit sticky, a bit of a bounce from the last numbers. I don't think that that had a lot to do with the better showing of the Canadian dollar right now. I think it's more just a dollar thing than anything else. Yeah, the market was also leaning into the dollar a little bit on the back of this leading indicator, but really last time we had a revision 0.1 higher, and this time it gave it back a little bit negative. I would not go to look for excuses for a weaker dollar on the back of this slightly lower US leading index data. Actually, let me just look quickly at those lines that we had. No, nothing so far on Bailey really. You're just saying that longer-term investors appear not to want to be so overweight on dollar assets. Short dollar is now the most crowded trade in the market, says Mr. Bailey. Um, okay, moving on. Kiwi, the trade balance has come down quite a lot. The value of the trade balance has come down quite a bit, and I think that is one of the reasons why the Kiwi also is underperforming, or today, or was underperforming at least. I'm going to have a bit of a look at the Kiwi today, because it's kind of interesting in my opinion. We then this morning had those public sector net borrowing numbers out of the UK, and it's not looking really rosy for Mrs. Reeves, our Chancellor. She actually appears before the House of Lords Economic Affairs Committee this afternoon, so she may be getting a little bit of a grilling there as well in the upcoming hours. So watch for any comments that she has about this. Yeah, public sector borrowing, which is creeping up, and which is one of the reasons that the market is not overly optimistic on the gilts right now. The market is really scrutinizing this because, in case of any mishaps, we could see a bit of a weaker sterling. Okay, not that we are seeing it versus a dollar right now, but maybe on the cross side of things, we need to be a little bit careful. What's next? We've got May retail sales for the mix. The mix has been relatively stable this morning. Powell, yes. Richmond Manufacturing Index, not your biggest moving data point. So I think for the rest of the day, it should be data-wise relatively quiet. So we are going to, again, unfortunately, having to look at whatever Mr. Trump sends out on his Truth Social platform. Um, Tomorrow morning or later today, we have the API. Actually, the API may be an interesting one because last week we had a massive build. It did not show on the next day's EIA numbers, but we had a massive API build last week. Continuing that vein, which usually, if you get such a big month, big week, sorry, the next week is usually giving back a little, perhaps, or showing a much lower number. But imagine that we had like have another one of those bumper builds. It may continue to weigh on crude oil, which is trading just above the $65 mark as we speak. We have the Bank of Japan core CPI out tomorrow. Unless this sees a variation and a decent variation of the expected number, I think there is bigger stuff to take note of now, or to take into account for what the Japanese yen is concerned, politics and trade talks, obviously. And that's about it before our tomorrow's flow show. So in theory, it should be quiet, but then the theory is the theory. Yesterday, we had this similar theory. Bran Ryan is off just for the day, mate. He's up in London. He'll be back. He'll be back tomorrow. Um, Let's move straight over to what we are trading. So yesterday, I said on the morning and on the European updates that expecting to a range to start to build with a bit of a bottom in place. I thought that 116.85 would be enough, but 117.10 would be possible. Well, we went over to up to 117.10, and we're actually still holding much better than what an immediate range may tell us. So I think there is, for as long as there is enough uncertainty surrounding this Powell saga, and also with the yields calming down, there is potentially a bit of a push higher up to 117.40. I still think that we are rather in a range building formation, but I'm not going to exclude that this was the correction. Okay, ideally, to say that the correction is over, we are going to have to push through 117.40, I'd say, but both possibilities are open right now. I'm not going. Let's say that I'm not going to stand in front of this right now because I don't know whether we are going to have this kind of surprise event that Powell somewhere may throw in the towel also, and then obviously the dollar is going to get hammered on the back of it, as we've already seen on this first reaction that we had when Trump threatened to get rid of Mr. Powell. So for the time being, I'd say yes, range, but looks as if we find buyers relatively soon, okay? Um, to really settle down in a range, we will have to go back, I'd say, towards 116, 40, 50. So get back through this little support that we have here. It's actually already supported around 85, but this is not far from around 70, 80. If we get back down below and we settle around 116.40, I think 40.50, that is going to give us the signal that perhaps this summer lull has started, or we are going to range more, okay? But uh, as long as it stays bid, I'd say allow for this to happen, and then we will see what really is going on with the dollar. For now, at least, the dollar versus the majors is not having a great time. And as you can see here as well, the cable, we haven't pushed through yet towards this 135 and a quarter, but we have, if you would draw a quite steep trend line, we have broken above. Yesterday it was around 65.70, as I said. We have broken above. We have actually come back to it this morning, and we are bouncing again. So this could still go up to 135 and a quarter before looking back, just to see if we are then going to trade the range or break through. This could be your 117.40 in the euro dollar, for instance. All right, 135 and a quarter, 135.30. And the reason why I think it may be a bit of a slower mover is because of those that borrowing in the UK, which may keep the sterling a bit under the cushion. And then I'm looking especially on this euro sterling. As we can see, we have, since we moved higher, we have held around the 86 and a half line. This could be a cross, I think, that retests those highs, gradually moving up to 87, just because sterling may be the weak cousin compared to euro right now, and that in turn may see the cable run up a bit slower in case we should see more dollar weakness. Okay, and for the cable, then if you look to the other side, imagine that we are going to see a bit of a dollar rebound. So the first indication would be to get through 60, and then low 134s is the one where it should stabilize. You can compare it to that 116.40.50 in the euro dollar. If it stabilizes around here for a while, then I think we are going to start trading ranges, okay? But it's a little early to tell. Over to the yen. Yesterday I said it was possible to test those low 147s. We've got it and we bounced. So that's a pretty decent indication as well that we could start to trade ranges too. Now, one of the things that if you look at the nervosity in the market was also based on Japanese yields, okay? But those Japanese yields have stabilized. They are not ramping higher. Even if you look at what the long end does, we've done a bit. Yeah, they're holding pretty strong levels, but they are not ramping higher. And this is what the market is nervous about. Okay, if we get an issue on the fiscal side, let's say for instance, Ishiba needs to go into ship with one of those parties that wants to cut taxes, then the market may get nervous about the yen JGBs again, and that may in turn weigh on the yen. But for as long as it doesn't happen, um, the yen is pretty stable actually, and holding its own versus the dollar. But again, versus the dollar. If you look at euro yen, if you look at sterling yen, for instance, we are still trading at pretty lofty levels. We are not breaking new highs. That is a fact. The yen market is stabilizing, but we are holding lofty levels. So if you look for a move lower in yen, perhaps dollar yen is again not your favorite instrument. But anyway, we have We have tested that low. We've bounced a little bit. Now we are just actually below this, trading below this 147.60, 65 again. So there is still a chance that we are going to test those lower, this low end again. And I'm borrowing Blake's line here, because that comes in at around 146.90, which is about where the Trump Powell scare low was as well. So I think it's still possible that we get there because, as I said a little earlier on the euro dollar or even the cable, it does look like the dollar is a bit under the cush deal right now. So I would allow for a retest of that, and then we will see what happens. Okay. One of the Japanese banks is calling for the whole story to be over, and dollar yen is going to go back down to the lower end of the bigger range, but I say it's too early to call because if there is something happening with the fiscality on the political side in Japan, the yen can weaken straight away again, and dollar yen would be higher. But again, as we stand, as we speak, dollar yen is maybe not your best instrument. If you look at Urian, for instance, this 173, 173 and a quarter is a bit of a resistance. And then we've broken below that very, very steep channel. So I wouldn't call this a real break because the prior lows around 171, 80, 85 have held, okay? And that is still only a very, very shallow retracement, less than 1% in the euro yen. If this breaks above 173 and a quarter, then we could be trading quite quickly up into the 174s, for instance. But just this to show that the yen is by no means out of the woods. Okay. Um, Also, if you look at Aussie yen, despite the relative lagging strength in the Aussie, is the Aussie and Kiwi are both laggards. It is still holding somewhere those break levels, and so if the yen is even not managing to strengthen and put pressure on those crosses which are laggards, it still means that it is beat. But this now, the antipodians is not my preferred because they are not looking as good as stuff like euro yen or sterling yen, for instance. Okay, so that I think is preventing dollar yen from going too low, but the dollar side of things is now holding it back from pushing higher. So we wait for a bit of developments. Would it be on trade or politics in Japan, on the dollar yen? Speaking about those antipodians, and I don't particularly like them. They again yesterday on the Aussie we had another try once more at 65 and a half. That 35.50 zone, call it 40.50. That 40.50 zone on the Aussie is key, really key. And we had a test and we failed again, and we are it is moving a tad higher because the dollar is losing a few pips now again. It's holding. The 64 is holding, but we can see again another test and another failure. Okay, euro, even sterling are holding much better than Aussie and the Kiwi right now. So Aussie is really going to have to break 65 and a half to have a chance to go then to test another brick wall at 66 as we have seen in the past sessions. So look at it from the other side then. If the dollar would garner some strength, there is a potential that Aussie may go and have a look at 64 three quarters, and why not 64 and a half at some stage. But for the time being, that is not really on the cards either, because as I said, the dollar is losing a few pips there, here and there. And another one that didn't hold. And then I think if you look at the loss in value of trade, you can look at the balance of imports and exports. That may still be okay, the balance. But if you look at the overall value in trade, it's usually not ideal for a currency. Okay, if you have got less activity in a country, is not really supportive for the currency. And we had a bit similar as in the Aussie, but then even more pronounced in the Kiwi. We tried and tried and tried. We couldn't make it back up to 60, which is the level, as I've mentioned before. We had this quick look above 60 and then came back to test the bottom end of the channel. Now we are trying a very, very steep line. One push, two pushes, and again it's got rejected, and pretty hard, in my opinion. So I think Aussie and Kiwi, and then Kiwi perhaps in particular, they don't look to be the ones, that you play the dollar short against, because any revival of the dollar, they may accelerate, and then in the Kiwi, it's going to be, can it hold 59 the figure? Okay, that is going to be the real question. For now, it's holding, and it's holding up relatively nicely, but that is just due to the dollar side of things. But if you look at the dollar, then it may not be your best instrument to be short dollars against right now. So if you look then at what happens, exactly what I've been saying, and exactly what you say, Bran, to find strength or weakness in those currencies, and I keep on banging on nearly on every flow show, but look at the crosses if you want to know whether a currency is strong or weak. And here you have the indication on the Kiwi. This is Euro Kiwi. Kiwi is weak because the Euro Kiwi doesn't stop going up. And then if you look at the fundamentals, what we have been banging on about, the Euro fundamentals are not that strong either. If you look at growth, and etc. But then still those crosses are higher. And then if you look at the Euro Aussie, same thing. I actually tried a short, and my average was around here. I gave it up this morning because I just didn't like it. Yes, we are at a bit of a level, but we've broken above this prior high. Was a bit too easy, but we are seeing the same pattern, albeit in a slightly different picture as the Euro Kiwi, because the Aussie is doing a little better than the Kiwi, but yet you're seeing this strength in the Euro Aussie. By the way, we are back in those. We had those 25 spikes higher before. I mean, if Euro Aussie confirms through 179 three quarters, we may be changing big figure relatively soon, but it still has to happen. But just to illustrate the difference in strength between the one and the other currencies. So for the time being, euro is still what people prefer to have. Why? Because it's the second biggest block after the US. Okay, and this is where we've been talking about that so often as well. This is where people are first going to look. Even if you are a central bank, if you are a global money manager, if you are a wealth manager, a wealth sovereign wealth fund or so, if you don't want to hold all your eggs in one biggest block basket, first of all, you look at the second biggest one. And that I think is one also of the reasons why we get a bit of demand in those euro crosses. Okay. Now let's look at the metals. Bit. All right. There's no other word. They're just bit. I said it already yesterday, when we were trading right just above there, and it continued to push higher. We have not broken above the prior high, but again, I mean, every setback so far is finding bids higher and higher. And now, for the time being, we're even struggling to get back to the 38, 35, 40 zone. So silver, yeah, it's still bit, and I think we are still on our way to the bigger zone here, which I've been highlighting from time to time. This is the 78.6 of the whole 2011, 2020 decline, and that comes in around 41 and a half. It does give the feeling to me that this market is not going to rest before we get a test of that level. Sometime in the future. And looking at the speed it moves, it may be sooner than we think. Gold is also bid. Yesterday, we've got a 61.8 there of this move. It finally broken above there. And as I said, next zone 34 figure 10, that's where we capped right now. And now you have this little range here, $40 range. have a look what's happening. Looking at how the dollar behaves, I would not be surprised that at some point we push through. Interesting, it has happened during the European and US session. But uninteresting is that we did not see any follow through in Asia, which is usually one that we are keeping a close eye on, obviously, to see whether mainly the Chinese, but other Asian accounts have an interest in continue to buy gold. We haven't seen it for the time being, so I guess we are going to rather range a little instead of just shoot through. Interesting though is that yesterday during the US session, we really kept on pushing. So keep an eye on that 34 figure 10 in the US session. There is a bit going on at 34.20, but if we break through figure 10, I wouldn't be surprised if we go back for a retest of that 34 and a half at some stage. And that will then be the gateway to go for a retest of the highs. That support trend line is still extremely strong. And again, it will continue to be strong, but also, as I told you, it's pretty steep and it's getting closer and closer and closer to market. So yes, if ever we break down, we may see for a quick retracement, but then we will have to look at those levels here for real supports, okay? But in the meantime, as we saw, it's holding extremely, but now it's possible that we already hold the 33.70s. Anything else, guys? Because I am sort of done for now, um, because it's not something well, I mean, the market is moving, but it's not moving in a way that I'm getting extremely interested because we could still be in a range forming consolidation on all things spot effects. Um, just a wider look at the S&P. Yes, we stopped around here. I think people have had some levels up here in the 63s. I think some extension levels also. But if you look at the wider picture, for as long as you're above 6,200, this is still very big in my opinion. So any moves lower, you're gonna have to monitor the 6,200. Okay, if you're on S&P. Fred, I am so sorry, but I have not watched nor traded Brazilian real for a very long time. I can have a look for you over today, perhaps for tomorrow, but it's really not something that I'm trading because it's a bit too exotic for me. I like the mix, I like China and stuff, but the Brazilian real I haven't really touched it. Okay, if peace cannot keep gold down, then what is gold target? 4,000. Look, we have no peace, okay? There is we can hardly call peace, right? Ali, we are in a constant underlying uncertainties are big enough. Can it go to 4,000? Well, usually it never goes in a straight line, but this this is starting to look, if you look at the monthly, in the long term, it is looking pretty straight line-ish, right? Here, the next big extension that I have is about 3,900. Can it go there? You know what I said at the start of the year, gold is one of the trades of the year, so I am not going to say we can't reach it there. It is, what is it? 500 give and take bucks from here. It's still possible over the months to come, especially if we get like a big imagine power goes. What is the market going to do? Okay. I think there can be your 100 or 200 next dollars for stuff like gold. No correlation between Dixie and S&P still very valid or strong. Well, first of all, I and don't look and never trade and never have traded Dixie, so I'm not going to start now. But yes, I mean the overall correlation between the Dixie and the dollar, between the dollar and the S&P, sorry, is still somewhere to be found, but selectively. Like look for instance, we have broken above 6,300 in the S&P. You're doing fresh highs, but then stuff which usually is risk positive if we think about S&P being higher as risk positive, people wanting to be in assets, we should be trading lower in something like Euro Aussie. We should be trading higher in Aussie. We should be trading higher in the Kiwi, which are risk currencies. We should be um, perhaps trading higher in sterling, which is in a way a risk currency as well. But you have certain correlations between the dollar and the S&P, but it seems to be confined, or it seems to be limited to really the euro right now. Because if you look at, so for instance, a positive risk, and there's another positive risk one for you. If you look at a positive risk pair, Swissy, Swiss should be trading lower, but we are stubbornly hanging around, not too far from lows in Euro Swiss, for instance. The Swiss is not weakening, which is typically a risk positive play. So dollar Swiss is going nowhere. It's actually even still offered. So there is a very, very limited and fragile, I'd argue, correlation between the dollar and the S&P. I do think that quite a bit of the dollar weakness right now is the uncertainty surrounding Powell, perhaps, a bit limited as well, that we kept around 450 in the tens here, as you can see, and we came back down, but we are stabilizing in the 430. So I don't think that that is the main reason. So it's a very, very fragile correlation, and I don't think we can, for instance, um, build a portfolio on the back of that correlation, if you see what I mean. Okay. Right, ladies and gentlemen, this is the end of today's show. Thank you, everybody, for being with me once more today. Ryan should be back tomorrow. We hopefully have a little bit more and a little bit more interesting stuff to talk about. It's going to be quiet on the data front, so watch for headlines. And I would say watch the ranges, but perhaps don't fight them too hard, okay? And with that, have a fine day, and we shall speak to each other tomorrow again. Thank you very much.